Hello and welcome on this very busy Monday evening. The Indian stock market has been witnessed a heavy gain since last Wednesday, with the benchmark Sensex rising over 1500 points and the Nifty 50 reclaiming the psychological significant 25,000 mark in these three sessions. Now, extending gains to the consecutive sessions, the Sensex rose over 600 points or nearly 1% to the intraday high of 81,846, while the Nifty 50 also rose by almost a percent on the intraday high of 25,000. Finally, the Sensex closed 583 points or to the 0.72% higher at 81,790, while the Nifty 50 ended at 25,700, up with the 183 point, which is a 0.7% gain. The Bombay Stock Exchange Mid-Cap Index jumped 0.68%, but the Small Cap Index ended with the losses of 0.20%, while the Indian stock market rising. Now, here is the first question: why the stock market are rising so fast? Now, experts highlight the following: the five factors behind the rise in the domestic market benchmark. Short covering as a play. Experts highlighted that the domestic market is witnessing a short covering in quality stocks after the recent corrections, which is driving the benchmark higher. Now, the IT stocks, which suffered a significant losses in the recent past due to the concern over the H1B visa fees hike and the other sectoral headwind. Now, they saw the healthy gain on the Monday, while the Nifty IT index jumped over 2% on Monday, rising for the third consecutive sessions. Now, the rally in banking stocks is also boosting the benchmark, as IT and the banking stocks together hold nearly 50% of the index weightage. The Bank Nifty index has been rising for the four consecutive sessions, with the cumulative increase of the overall 3%. Now, the status quo on the policy rates and the stance by the Reserve Bank of India. Now, this alleged that the immediate concern about margin pressure on the banking players. I think the RBI policy was quite constructive from that perspective. Now, the BS has also started performing well. Additionally, the IT sectors is witnessing some short covering together. These two sectors make the up Nifty nearly 50% of the index, which is majorly reason behind the market movement. The RBI monetary policy was the expected line, which seems to have the comfort the market. The projections of favorable growth, inflation dynamics, and the dovish tone of RBI Governor Sanjay Malhotra influenced the market sentiment. The RBI has raised India's FY26 GDP growth estimate to 6.8% from the previously projected 6.5%. On the other hand, the central bank has revised the inflation forecast downward to the 2.6% for the FY26 from the earlier projected of 3.1%. Most of the announcements were broadly in line with the expectations, with the policy maintaining the status quo. Several announcements related to fundraising and the provisional ROMs are likely to have a beneficial impact on the BFSI segment. Hopes are high that the worst in the term of quarterly earning is behind us, and healthy rebound from the third quarters onward had the trend that could be signaled by upbeat management commentary during the quarter 2 results seasons. Now, according to the brokerage firms like Motilal Oswal Financial Services, the earning cycle is bottoming out, with the growth likely to pick up into double digit. Now, Motilal expect that the quarterly PAT growth of 12% year on year, each in quarter 3 FY26 and the quarter 4 of FY26, and the annual PAT growth of 11% and the 14% year on year for the FY26 and FY27. Now, FY stands for the financial year, as you all know that, respectively. Now that earning cut cycles has already started to ease, with the latest quarterly cut as more modest, nearly 1 or 2% range, said that the brokerage firm. Experts highlight that the valuation of the benchmark have reached reasonably level, and this should be prompt that the shift in the stance of foreign investors. Now, the foreign institutions investors have been on a selling spare of Indian stock in the cash segment since July this year, driven by weak earning stretched valuation. the rupee weakens and the US tariff. Valuations as reasonable. Valuations are reasonable. Sorry for. With Nifty trading at the 20 times in line with the long period average and the evidence of earnings growth pickup should have the valuation expand. We believe that the cavalry of measures by the government will help to reset the trajectory of corporate earnings or domestic reforms are expected to continue, while any resolutions of the tariff stalemate will be a key external analyst in our opinion. We see potential of further market upside, especially in an environment characterized by improving corporate earnings growth, low interest rates, simple liquidity, and the macroeconomics recovery. Now let's take a look of the Tata Capital IPO has also reserved more than 50% of shares in the public issues for qualified institutional investors. Now buyers, not less than 50% for non-institutional investors, or not less than 35% for the offer is reserved for retail investors. The employee portion has been reserved for the 1 CR fund to 2 lakh equity shares. Retail finance. Now the company typically offers to salaried and the self-employed individuals and owners of small businesses, retail customers with a wide range of loans such as the home loans against property, personal loans, business loans, two-wheeler loans and the car loans, commercial vehicles loans, construction equipment loans, loans against securities, microfinance loans and the education loans. As at June 30 for this year, retail finance compromised with the 61% of a total gross loans. Now the SMB finance company offers supply chain finance, equipment finance and the leasing solution for their customers. Further, they offer term loans, Clindi, and the infrastructure finance and the developer finance to businesses with the latest available turnover of less than or equal to $2.5 billion. Now the SME customers as June, as for this year, as I already told you, that the finance compromise of the 26.2% on the total gross loans. Corporate loans are the major finance. Company also offers terms with the loans, clean tech and the infrastructure finance and the development. Developers finance to the businesses and the latest available turnover of more than 2.5 billion. Corporate customers are also the leaning on the lines to finance. That's all. I shall see you soon.